Hi, everyone. My name is Erica. A little bit about me. So, wait, first, I want to say I do not have a PowerPoint because I think I would rather have a conversation about taxes, and I think that it's a complicated topic. And I think it's so much easier to have a conversation, and I have so much information I want to share, and I do not want to be limited. I do not like that. But
Right.
so really quickly about me, I'm originally from Ohio. I live in Chicago. I've been here for almost 8 years now. I have my first degree in advertising and my master's is in economic development. And I am super, 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 super passionate about wealth disparities, how we manage our money. Y'all know people get serious when they do this. But I am like really, really when I was in my master's program, like diving into wealth disparities, that it is just such a something that I'm really, really passionate about. And I wanted to position myself in a space with working with small business owners, particularly Black people, because I think that being a business owner and really having your own income says like, hey, I can support myself, no one can take this away from me. And I believe that it's also a solution as we try to move the needle in wealth disparities and help Black families get more money. And when we really look into like the history of it, um and we look at these big companies like Google and Amazon, and it's like they're paying $0 in taxes. And it's like, well, why can't I do that? Why can't my family do this? Why can't we keep our little coins in our pocket? So it drove me into the tax world and the tax industry, and really just wanting to work with small business owners just to really help lay the foundation and to be able to teach tax law and tax strategy so we can utilize it as people and save our money and keep our money in our pockets. So the first thing that I really wanted to start with is I want to dive a little bit into S corps because last week when I was on here, a few of you, well, most of you all, well, everyone mentioned that you wanted to transition into an S corp, and I just want to break down a little bit of the specifics. If I'm looking this way, it's because I'm looking at my notes are over here on my second monitor, but I think even when we just talk in the world, well, does everyone have an LLC? Is everyone an LLC?
I'm a corporation.
Your corp, are you a C corp or S corp?
C corp.
C corp. Okay. So, do you? Why did you decide to be a C corp?
Um, Probably because I didn't have enough information about S corp at all. Because once learned a little bit about it, I was like, I should have done an S corp. So
Yeah.
that's probably
So
what.
don't worry. You can definitely change and switch over. It's just a different paperwork. That's all. But I think that a lot of people are trying to make a move to an S corp because they're like, oh, you can pay less in taxes. You can pay less in taxes. Yes, that is true, and that is fine and dandy. But of course, it's like the grass is not always greener on the other side. So what the hype is about when it comes to S corps, basically, let's say as a business owner, you bring in 100K, right? So what you're able to do as a business owner is say, hey, I want to pay myself a salary and I can pay myself 50K, bam, and then the other 50K stay in my business bank account. And as being like the sole owner of that, what happens is you are relieving yourself from that 15 point, it's like 15.6%, but you're whatever you leave in your business bank account, you're relieving that self-employment tax. So your business is not paying that self-employment tax, you're paying that self-employment tax. But as a business owner, if you make 100K, then you're being taxed on that whole 15%. Does that make sense? So having an S corp, what it does is it allows you to split your income up into two. So you have a salary for yourself, and then you have the profits that your business make. But currently, as an LLC, everything is considered one because LLCs are considered a pass through entity, which means that the money passes directly to you. And whether if you keep the money in your bank account or if you keep the money in your business bank account, it doesn't matter because it's all going to be taxed the same. Does that make sense? Okay, cool. So now this is the ugly part what people don't talk about when it comes to maintaining an S corp, right? So now that you are an S corp, when you first start your business, you have 75 days to elect your LLC as an S corp. And if you do not make those 75 days of electing yourself as an S corp, then you have to go back and have it's like basically called like late filing paperwork. And they basically want to know like, well, why didn't you decide to do this in the first place? And you basically explain to them why, what happened. Maybe you just learned something new, or maybe you can say like you're bringing in more income and you believe that this business structure will be suitable for you. But when you pass that 75 days, you are less likely to become an S corp because they're like, oh, well, maybe they just want to take advantage of the tax purposes. So keeping that in mind when you start another business, or if you have a current business work, I like here to help if you want to make that transition. And then the second thing is when you become an S corp, since you are setting yourself up as a salary because you're paying yourself, you have to register your company as an employer. You don't have to do that as an LLC if it's just you because you are your only employee and it's a pass through entity. They look at all of the income as the same. But with an S corp, they look at the income differently because they're saying you have a salary and then your company has a distribution. So as an S corp, you have to set yourself up as an employer because you're hiring yourself for a salary. And the way that works is it's different in every state. So if you just like Google like register as an employer, it'll come right up whatever the state laws is for your state because you're setting yourself up as a payroll and you have to pay payroll taxes. So, number one, when it goes back to having an S Corp, make sure you do it within those filing days. You have to register yourself as a employer. And then the third thing is that you want to set up a reasonable salary. So like again, who doesn't want to like relieve themselves of like 15% of taxes? Like that's a nice amount of money.
Mhm.
And a lot of people, well, not a lot of people, but businesses have gotten over on this, and they'll say, "Hey, okay, I'll pay myself $20,000, and then I'll keep 100K in my bank account, so I'm not taxed on everything." But you cannot do this, and the IRS requires business owners to set up a reasonable salary. And the rule of thumbs that I tell everyone is because this is the IRS leaves so many things open for business owners to decide. A good rule of thumb is just to set up like a 50% salary. Pay yourself in percentages. And even with LLCs, what I say people, and this is what I even do for myself, is at the end of each month, I have a meeting with myself. I budget 20% for taxes. I put 30% away for my operating costs, and then I pay myself that remaining 50%. And I do that at the end of every single month. I have a meeting with myself because as business owners, our income is very inconsistent. It does not stay the same. So I don't have a set number of how much I pay myself. But going back to an S corp, those are the three things you need to make sure you are able to maintain is registering yourself with the state, setting up a payroll because essentially you're paying yourself. Like there's so many tools out there to pay yourself. A easy one is like QuickBooks. They have payroll on there. As entrepreneurs, we do like a lot of things ourselves, so it's really easy to do things for yourself. You just have to take the proper steps to make sure that you are able to maintain that. Because at the end of the year, essentially, like you are issuing yourself a W-2. And then another reason when it comes to S corps, and this is something that some people try to get over on when they really know the law, is that Oh, Gusto, yes. I know someone that used that as well. I haven't used it myself, so I was not going to recommend it.
It's really good too if you pay contractors as well. It's
Oh,
like a
really?
one, yeah.
Okay, I have to check it out now. Wait.
Okay, and Wave apps. I've used Wave.
Yeah, so that's it's like S corps are really good. They are useful, but you want to make it just goes back to making sure that you have that proper structure in place because it definitely is beneficial. But you just want to make sure that you get the right structure in place and don't just go say, "Hey, I'm going to do something," and then now it's like, "Oh my gosh, now I'm doing all this stuff." And when it comes to S corps, because the IRS knows there's major tax benefits for being an S corp. Like they audit those business entities way more closely than LLCs, specifically for just for the tax purposes and the tax advantages. So, okay. Yeah, that was. Does anyone have any questions about S corps? I know I said that pretty fast. But I wanted to make sure I broke that down. Does that mean the hand raised? Does that mean someone has a question for me? Okay, go ahead.
Yeah, that's me. I didn't want to interrupt you. Everyone talk at one time, but my question is, because I know you were saying I heard that too, like how Amazon is able to, where they're not paying any taxes. And maybe my phone was a little messed up, but I was wondering, like, how are they able to do that? Is it because they're having more people that they're saying are more employees, or having more business expenses?
Well, I don't know Amazon specific strategy. I've done a little bit of research.
Not really them, but just in general.
So in general, so keeping this in mind, these companies that are making like billions of dollars, they have tax professionals who are working every single day. And when we think about the typical small business owner, y'all, I don't want to say you all because I don't know y'all lives. I'm not making an assumption. But typically, small business owners meet with their tax person once a year to get their taxes done. And in order for that to even happen and take place, to take advantage of all the tax strategies, you have to meet with. So this is like a coming soon. What I was going to say for later, like I'm launching a course for small business owners where we meet 4 times a year so I can help them get their paperwork in order, but I have not launched it yet. But it's a coming soon. But the way that they're doing that is because they have people who work every single day year round who are making sure that they take advantages of tax laws and tax strategies. So say for example, as a business owner, if you hire someone who's either like an ex-felon, who's a veteran who receives Social Security, anybody that falls within these specific categories, in order for you to receive those tax credits, you have to file that paperwork within 28 days. So, as a small business owner, you can't come to me and say, "Hey, I hired this person earlier in the year. Let me make Erica, I need my tax credit." It's like a no, ma'am, no, sir, because once you hire that person, that work has to be filled out and submitted to the IRS within 28 days. So the reason why they're paying little taxes is because they have strategists working year in and year out with them. And it's definitely possible to take advantage of every strategy that they're using. It's just that you, as small business owners, we have to get on a schedule of working with someone more than once a year just to get our taxes done. Did
Yep.
that did that help, Destiny?
Yeah, yeah. It's actually Christina. Just but that's what I go by. But yeah, my name is actually Chris or Christina. But yeah, that was my question. Not that I'm saying like I ever get to like Z. I'm not thinking that, but I'm just wondering how they were able to do that. So, but that makes sense that what you're saying, like if you have somebody that you're working with that's constantly looking at things and checking these things and really know all the tax laws in and out, I can see how. I
Right.
mean, you can be better off.
Yeah, let me chime in real quick. So, one of the things that's super, super crucial and really the essence of what she's saying how you participate in taxes as an individual is much different than a business. And so when you're working with someone, or I like to even use the word partnering, because when you hire an accountant to do your taxes, it's a one-time thing. It's a completely different experience when you're working with them, and they can say things like, hey, actually, if you do this team event over here, we're gonna have a tax credit. Or if you attend this workshop or go to Arizona for this educational thing, they're able to make decisions. So that strategy piece she's talking about is recommendations on how you can save in taxes. That's the practical piece. So it needs to happen on a recurring basis and not a one-time thing, because if it's one time, it's reactive and there's nothing we can do about it. So it's important that you have like your, and not just in taxes, it's really in business in general. You need to have your team, assemble your team. Who is your tax person? Who is your business coach? Who is your therapist? Plan. Listen, you need to have your team. You need to have all the ducks in a row so that you can show up how you need to show up in your business and take advantage of all the things. Because there's no way for you to know all the tax policies, and without her knowing your state and your business, and all, she wouldn't be able to give you, like, I'm not saying that you were asking for that either. I'm just saying it for the record. So that's why it's kind of one of those things where you have to build a relationship with your tax preparer. And I had that same question, and that's why I wanted to elaborate here. What you currently have is not what you're supposed to have as a business owner. That relationship of send me all your paperwork and I'll take care of it, that's not how it's supposed to be. And I didn't know that. So look for someone you can partner with, like Ayrika.
Yeah, I agree. When it was actually this, I'm trying to keep track of time too. It was this article, I cannot remember the man's name, but he was like head of something financial division with the government. And he was just saying like one of the reasons why small business owners fails because they don't take advantage of tax law and tax strategy. Um, yeah. But so I wanted to briefly break down how an S corp works and how it operates. And the other advantage with an S corp is, say if you go in and you decide to be an S corp, if you want to change that election status back to just being taxed as an LLC, a sole proprietor, you can do that. Like it's way easier to remove yourself from that status versus becoming that status, which is super simple. They don't even require any extra why you want to change it. No, they just say, okay, you're no longer S corp. So I have a few tax tips and tricks that I really want to share. And I think it'll be super useful. So going back to pay yourself, I talked about this a little bit already. But another thing is, if you're not doing this already, and you may already be because you are a part of a business group, it's just meeting with yourself once a month and just knowing your numbers and becoming like best friends with your numbers. Chrissy is shaking her head. Yes. Like going back to just paying yourself and keeping everything separate from, you have your personal account and you have your business bank account, right? You need your business bank account to get loans, to get grants. They want to see what is your activity looking like in there, and you want to, it's just a part of like establishing yourself and really just breaking down those percentages of making sure you put money up for your operating costs. And if you don't know what your operating costs, it's super easy to figure out. Just figure out how much money not how much money, but what are all the expenses that you need in order to keep your business operating and staying afloat. So really breaking down and understanding those costs. And my rule of thumb is always to put like 20 to 25% up for taxes. Even if you don't owe anything at the end of the year, it's just really good to have that money, and it'll be like a little gift if you don't owe anything. And then the second thing is making sure you are tracking your expenses. How is everyone tracking their expenses somehow, some way electronically with the app or anything? Okay. No, yes, FreshBooks. Huh. Okay. I haven't used them before. I just heard of them. And this goes back into when the IRS leaves things open-ended, right? So as business owners, the IRS says you can write off anything that's ordinary and necessary. So anything that is ordinary to the functioning of your business and that's necessary to keep your business afloat, you can write all of that off. As long as you can say, hey, I need this in order for my business to make some money, then it's a write off. I even have some clients that are videographers. Like they can write off their next Netflix subscription. Why? Because they're using Netflix as like an educational tool. So it's up to you to make those decisions on what is necessary in order for your business to function. And then also making sure that you are tracking your mileage. And if you do not have like some sort of like a mileage tracker, I think for this year, for 2020, the IRS is allowing business owners to write off 56 cents per mile. And the easiest way to do this, if you do not have a mileage tracker, is to take a picture of your odometer now, take a picture of it again at the end of the year, subtract those two numbers. I also have this on my social media page if I'm saying this like really fast. But subtract those two numbers, determine your business percentage use, and then you can figure it out like that. Did I say that too fast? No. Okay, cool. Okay. And then also going to like medical expenses. This is another reason why you should have a tax preparer on your team. Chrissy mentioned earlier therapy, like you can write off your therapy sessions. Like as a business owner, what the rule of thumb is for medical expenses is if you exceed like 7.5% of your medical expenses, I'm sorry, if you exceed 7.5% of your adjusted gross income and how much money you're paying. So let's say, for example, if you bring in $10,000 and through 7.5% of $10,000 is what, Erica, of $10,000? Like 3,000 and something? Guys, I cannot do math in my head. I'm going to get my calculator. Let's do this. That's what the phone is for, right? So 10,000 times 0.075. Oh, it's 750. Somebody could have told me that. Yeah, I'm pretty sure you're smarter than me.
I was saying it, but I was muted, and I realized it. And by the time I was about to unmute, you had the calculator. So
Let me not even act like I can do that fast, but I probably could because it was just 10,000. So let's say, for example, if you bring in $10,000, right, and you spend more than $750 on those qualified medical expenses, then you can write all of those off. So some things that are included in there is like eye exams, eyeglasses. We all have eyeglasses, dental expenses, abortions, therapy, psychologists, um, the rides if you have to get into an EMT, if you need to pay for like breast milk supplies to help get your breast, what is it, I forget the exact name of the supplies, but all of that stuff is like you can write all of that off if it exceeds like a certain if you exceed that 750 mark, that 7.5% of your income, you can write all of that stuff off. And this just goes back to saying like, hey person that's helping me with my money, can I write off these medical expenses? What can I do with this? I spent all this money on my teeth. You can even write off if you got to get some fake teeth. Like, yeah, the list goes on and on. But it just goes back to keeping track of your medical expenses. So whoever you're working with, say, hey, this is what I did this year, this is what I did this month, is this considered a write-off? So whatever you do, just keep your receipts. And if you come to me and work with me and you got like a whole bunch of receipts from 2020 and we got to take a look at those, then we have to take a look at them to keep your expenses down. Can anyone hear that? Okay, I don't hear it anymore. I don't know. That was happening last time. I don't know. It's so weird. Um, so this just goes back to tracking expenses. Keep track of everything. A good rule of thumb is to keep all of your receipts for 3 years because that's the furthest back the IRS can go. And the only time when they're like allowed to go back any further than 3 years is if you are in a situation like Trump and they say, hey, we need to come up in here, and then the furthest back that they can go is like 6 years. So they can't go past anything after like 3 years. So once that 3 year mark hit, you can delete or do whatever you want to do with your receipts. And a strategy that I want to use, I'm not want to use, but want to share because I know a few of you have some babies, have some children. So one tax strategy is like hiring your kid, hiring them babies and putting them to work. They are going to be a model for your advertising, okay? So, as having a business owner and you being like the sole proprietor, one way to like, this is like a way to shelter income is you hire your kid, but you have to make sure you go through those appropriate steps of registering yourself as an employer, creating like a job description for them. But the beautiful thing of hiring your kids is that your kids don't pay, what don't they pay? They don't pay Medicare and Social Security. So that's relieving yourself again of like about like 15% of taxes that your kid does not have to pay. So, and the way that that works is again, you want to go through those correct hiring steps, and the max that you can pay them, I believe for 2020 is 12,000 and like $200. Last year was 12,500. Like they change it. Yeah, they change it a little bit each year. But hiring your kids, getting them on payroll, getting them set up with a bank account. And then I have a client, and he has for his son, oh man. So this goes back to her name is not Destiny, it's Chris. She changed it. I was like, where did that Destiny name go? But I have a client and he brings in probably like about like 800K a year. So we meet once a month. We go everything. I make sure he pays his kid. We have him set up on like $1,000 a month, and then he uses that card then to pay for his child's expenses. So that money is not coming from him. That money is coming from his kid's bank account. But you have to make sure that you set up a job description for them, and or even if they're older and they can sweep the office floor, put them to work, make them do something. Or if they're just going to be a model in photography, make them, they're going to be a model, they can do something. uh so there are, I'm saying like, and this just goes back to like how these companies are not paying taxes because it's strategy, and there's so many rules. And then
What's the minimum that they have to be paid? If the
there,
maximum is like 12,000, is there a minimum?
there is no minimum. Nope, there is no minimum. Um, and then like keeping in mind as a business owner, um, just because the strategies are there and the strategies are available, you don't necessarily have to use them until you think that, and this is again why meeting with a tax preparer is important, until you think that you're going to owe. So say for example, if you make 100K a year, but then your expenses completely max everything out, all of your business expenses, your rent, your home office, your desk, it's just maxing out all of that money, then there's no need for that strategy, right? The second thing I want to share, well, not, this is not the second thing. I'm looking at numbers on my screen. I'm like past number two. Um, but another thing that I want to share is to make sure that you have some type of like business credit card. Um, it may not be like likely or the best thing, but it could be used as a tax strategy. So let's say come time the end of the year, you meet with me in December, and let's say I'm like, oh my gosh, you are gonna owe like $6,000 in taxes. It's December 29. Let's figure something out. So maybe for the top of the year, you had so many purchases that you want to make. But what you could you do is use that business credit card, make those purchases, and write all of that stuff off. But on your credit card, you only have to pay whatever that minimum balance due is, or however that your bank operates. So I always recommend having some type of business credit card because it just helps in keeping the numbers low, depending the time of the year and depending if you owe. Um, and then the last thing that I want to share, which I found this really interesting because I learned this maybe like 2 years ago. And I still share this with people because I think it's super important. So, any recommendations for cards? So I think what you should do is find a credit card that works for you and works for your lifestyle. So personally, I bank with Chase. I have my business credit card with them because on every purchase, I'm able to get 1.5% cash back rewards. And you know how with some credit cards, you can like write off like flights, and not write off flights, but you get points for your flights, excuse me. But do some research and find a card that works for your lifestyle and for your spending habits. And then also understand with the credit card and the company, because it's business bank accounts, understand like, okay, do I need to have a minimum in my bank account? Because some banks charge if you don't have that minimum. So just do your research and see what credit card works with you, because I know with a account that I have, I think I have to keep like a $1,500 minimum in order for them not to charge me, and that's okay. I'm able to do that. But if they was like, you need to have a 20,000 minimum, I was like, no, ma'am, like I can't do that. So find, do some research and find like a credit card that works for you and works for your lifestyle and works for your spending habits. And then does anyone have any questions? I want to make sure that I get all questions.
Hey, this is Chris again. Yes, I do. um, so I know you're talking about that you can have your child as an employee. What? So is there like a specific like tax credit you get for having a child? That's why you say that. Because I was wondering, could you do the same with other, like for instance, if I had my husband as an employee or like a family member as well, or is, like I said, is there a specific reason to have like your child, or why it couldn't just be someone else or other family member or something like that?
Yeah. Yeah, so the tax, I'm trying to look up the exact percentages because I don't know the percentages off of top of my head. But you know, when you're working a job and they give you that W-2 and you see your paycheck, they took out money for Social Security and they took out money for Medicare.
Yes.
So when you hire your child does not pay any of those taxes. So
Oh, okay. Okay.
that's the benefit of it. They're still an employee, so they'll have income taxes, which I know for the state of Illinois, I think it's like 4.5%, but it relieves them from having to pay Social Security and Medicare taxes. I'm looking at the exact percentage. So the current rate for Medicare is 1.45 and Social Security is 6.2. So it's relieving you about like 7% in taxes of what you would have to pay as a business owner. So it's kind of like the strategy and what it is like you're just moving your income a different way so you can save money on it and pay less taxes. Did that help?
Yeah, I mean, I heard people say heard that before, and I understand what you were saying, but I didn't understand the why behind it. The
Mm.
real, the concrete why, not just hire your kid. Like, why? If I could hire somebody, I just didn't understand. Thank you.
Yeah, yeah. No, you're welcome. Yeah, so it definitely cuts the way you're taxed by 7%. Um and then the last thing, what I wanted to share is just making sure that as a business owner, you have your operating agreement in order. Oh, it's 6 o'clock. I'll say this really fast. Just making sure that you have your operating agreement in order. And basically, what your operating agreement determines is how your business operates. And you especially want to make sure that you have this if you are going into a partnership with anyone. Even as a sole proprietor, it's fine because it's you, so you are owning that whole thing. But when you are in a business agreement with anyone, making sure that you have an operating agreement if you're starting anything with anybody, because that operating agreement is like the Bible for your business and it determines pay, just basically how everything is going to work. And then being an LLC, and because of the status of an LLC, because it's a pass through entity, meaning all of the income is looked at as the same. You as an LLC, you need to update your operating agreement and make sure that you say, hey, this is what I want to do with my business if I die. And the reason why that's so is because as an LLC, in the way that the government views LLCs, at once the business owner dies, the business completely dissolves. But if you were a corporation, your business is fine. The state law allows corporations for the next of kin or for somebody to jump in and take over because it's a corporation. It's a completely different business structure. But being an LLC, and because of how the business is viewed from the IRS, the business completely dissolves. And then what the crazy thing is what I don't like is that the law is completely different for every single state. Some states allow the businesses to have 90 days for the next of kin to pop up, and some states don't. But regardless, if it does have that 90 days, the business will dissolve unless you put in your operating agreement, I want my sister to take over this. I want my mom to take over this. I want whoever to just close the business out for me, or I want to pass this on to my kids and they'll do X, Y, and Z. Yes, I surely do. I really do. Um, I'm gonna put a link right here in the group chat before we get off because um I just sent somebody this. Trey. And then I'm going to change the link to just view as. And you'll see in here where it's a highlighted section and it'll show where you need to change it for yourself to fit for however you want to do it. Um, Anyone with this link can view. Okay. Copy link. So what I just sent you, it's a view, it's, the Google Docs, the view as, so you just have to click it and download it and save it to your computer. But this is like a complete full operating agreement. And what I mean by full is if you have like a partnership, it has rules in here for partnerships, but take a look at it and you can change it, switch it up to however you want um, it to fit you. But it's a good starting point if you don't have an operating agreement.
Perfect. Well, thank you so much, Ayrika. Does anyone have any final questions before we wrap for this evening? Anything burning? Hurt? Oh,
I was just gonna ask for her contact information if that'll be provided like in an email or something, or through Slack. That's what I meant.
Yes, I'm like actually about to. I'm going to put my in. I guess I could share with Chrissy some more information. I'm about to put my Instagram name in Slack, and then I'll put my web. I said in Slack. Oh my gosh! I mean in this chat. I'm seeing what you said, and then let me put my website's name. Let me type it out. Creators Tax Company. Yeah, so you can follow me on Instagram. You can schedule a free consultation. All of that information is in my link tree in my bio, or you can do it from my website. It's all up to you, but I'm pretty open to answering questions because I'm just super passionate about helping people and getting their business structure together because I don't have time for no games and I ain't got time for the IRS.
listen, I don't think any of us got time for games, okay? It's kind of the whole nature of it, the work that we do. No time. No time.
Right. And then because I just want to, if any of you all need help with your taxes, because it's tax season, I can offer you 25% off for business owners. I'm not gonna say redeem it in 10 days. No, if you want to, then just let me know and say, hey, Erica, I'm a part of Chrissy's business group, and I can definitely do that for you.
Beautiful. I'll make sure that Danielle, I know she had to drop. Kayla, I saw you unmuted. Did you have any questions? I just want to make sure.
Yeah, I just totally agree with I would just totally agree with getting acquainted with a tax person. I'm very acquainted with my tax person. I forgot her name. I know her name and everything. Like I know her. I called her actually this week and was like, hey, and she was like, did you do like I told you to do? And she sends like emails of everything that's going on with the IRS and everything. She keep me very abreast of everything that's going on, even with the pandemic and even all my little extra credits and stuff like that I have going on. Like A1 advice ever. And like she knows my kids. She's been there for 3 years and she knows them personally. She understands, but she about her business all the time. She ain't gonna cut no corners with you. She ain't going to jail for nobody. Let's just say that much. But yeah, I totally agree. Totally agree. But this stuff was very informative. My kids are cute, so they're gonna be cheesing forever. They already got a job. I was like, man, y'all gonna make me some money. Look at that. Thank you.
You're welcome.
Oh, beautiful, beautiful. Thank you so much, Erica, for joining us. That was amazing. I'm even taking notes. But yeah, so we'll definitely reach out. I know people are already probably gonna hit your Instagram up. Do you want to stay after so we can chat for a second after, Erica?
Me?
Yeah.
Yeah, I would love to.
Sweet. All right. Well, thank you, ladies, for joining me this week. I will see you all next week. Pay attention to Slack because I will be coming for you because you got to tell me those action items still. This is not a get out of jail free card. Okay. So I will be coming for you in Slack, or you can just go ahead and put them in there for me anyway. If you wanted to save me time, I appreciate it. All right, ladies, I will see some of you later this week. And also, I know I reached out to some of you guys. If you're interested in doing the video testimonial, I sent out an email. Just schedule the link with me. But yeah, next week we have Penny Love talking about how to invest in wellness and how to kind of balance the transition with business and all that stuff. And then we get back to the same old thing. So, but all right, ladies, I will see you all next week if I don't see you later on this week. All right. Bye. Bye, Nikita. You're so quiet. Bye.
I'm here. Yeah, I've had a rough day. All right. See you later.
And let's connect this week.
Yes. I was actually about to message you now. I can't see where to cancel the other thing that I scheduled. I'm looking at the email. Oh, okay.
Canceled it. You're fine. You're fine. All right. But just send me a message if you want to meet this week or next. And also let me know if my theory was right about you feeling frozen, because I feel like you feel frozen.
Yeah, I do. I'm a mess right now.
Okay. Well, then yeah, no, like okay. It sounds like it's dire. So definitely I'll make it work. Just send me a message.
Okay.
All
right.
Tomorrow though, not today. All right. Bye. Hi, Erica.
Hey, Chrissy. You are amazing.
Thank you. I'm going to stop the recording so I can keep this.